I really think that the gold markets will take off, silver as well, when they throw in the towel. When the Fed says, well, we've already printed umpteen trillions of dollars over the last couple of years, and we are seeing inflation now, but the economy is so bad, we're going not only to pause, we're going to cut. I don't see that happening for a while, by the way, but at some point they probably will.
In his video, David Morgan discusses the potential for gold and silver markets to surge in response to a shift in the Federal Reserve's monetary policy. He suggests that when the Fed decides to abandon its tight monetary stance to defend the US dollar's value, it could signal a loss of confidence in fiat currencies and lead to significant market changes, though not necessarily overnight. I guarantee you will get important information from David Morgan's speech if you stay tuned until the end.
Exactly. I mean, as I've said and many other commentators, we almost always get a summer doldrums. There's been exceptions, but there are exceptions. The seasonality is very strong in the summer months. Gold usually hits its low in August, which was close to this year. And then it's not an immediate September 1st. It starts coming back up, although generally speaking, the last quarter of the year is generally good for the gold market. I think what's going to happen is we've got this purported end of money for the U.S. government by the end of September. I haven't looked into it real deeply, but I've got it from good sources. So if this is true, there may be an emergency meeting of the Congress critters to, fund the government again, regardless of whether any of that takes place or not. I do think and have been saying for some time, and I could end up with egg on my face, which is fine, that October we would see some kind of market shift in the equity market. What's frustrating to me is being, I'm a student of the markets my whole life, and I'm learning more. But I don't recall seeing a market like gold or any market where we're within about 10% of the all-time high, and the sentiment is so bad. If gold was down at 1,500 or 1,600 or something like that, I could see the sentiment being where it's at, but it's not. It's basically hanging in there, as you said, and it's within striking distance of the all-time high, and yet everybody's got a long face like it's trading at very low price. I mean, both your major gold companies have a pretty good margin, and they're making money in fiat terms, and that's not true in the silver market. I mean, depending on how you figure all-in sustaining costs, we're anywhere between $22 and $25 the ounce. So most of these silver producers are not making money, or if they are, they're not making much. So, you could be glum if you're a silver investor for the right reasons, meaning, it's really not doing well relative to what the costs are. But gold's a different story. And yet, from what I see, the sentiment's low. So I just want to make that comment because, again, it's unusual to see something, but I think the reason is that it's just doing what that famous, I know it's famous, that adage that I coined so many years ago that silver will scare you out or wear you out. It'll just go sideways in a trading range for so long, you just get bored, you give up, you sell out, or I'm never buying the silver again or whatever, because those are perfect times to accumulate if you're a long-term investor. But a lot of people in the world of investing are really not that patient. Some are, but a lot aren't. So back to you. I see them up either scenario. If we get a pullback and a good correction in the stock market, they'll come down. But then they'll be the first to rally. And if the market continues down, gold's the most negatively correlated asset to the stock market. So at some point, not day for day, tick for tick, but general trends are there, you'll see gold actually do better. I actually think we'll see a new high in gold by the end. Not anything like $200 more than its old high, but a new high. And it might get there and pull back. I don't know. It's already triple topped around that area. I think it'd go through it. And I think silver still, as much of it's been beat up this year. I think 26 something was the high in early May. But regardless, I think you could see better prices for silver as well. Well, interest rates do drive it, but not to the extent, and I've said this on your show before, to the extent that some people are taught to believe by the economic establishment. That is that any increase in interest rates is very detrimental to gold. That's not true. Gold goes up in an increasing interest rate environment for quite some time, and the only time interest rates really take power over gold is when you have a real rate of return. And if the real inflation rate's say 7%, and you're only at 5.5, then you're actually still yielding a negative 2% or so in real terms. So until you get a real return rate, then it can have an effect on gold. But there's so much funny money out there now that even if it did get to say par, we got to 7% interest rates. I'm not saying we will, but if we did, you'd still be break even, which is better than losing 7%. But so it will have some effect on a knee jerk reaction, but over time, you'll just see gold continue to march up and up and up. And you'll see them start to shift more and more, meaning that they're going to retarget. The 2% won't be the target. They'll modify it and say, well, really, under current conditions and the supply chain and the illness we had, and they'll make some excuses and they'll say, we're going to shoot for, pick a number, 3%, maybe 4%. Who knows? I mean, people as old as me know that Nixon put on wage and price controls at 4% inflation. I really think that the gold markets will take off, silver as well, when they throw in the towel. When the Fed says, well, we've already printed umpteen trillions of dollars over the last couple of years, and we are seeing inflation now, but the economy is so bad, we're going not only to pause, we're going to cut. I don't see that happening for a while, by the way, but at some point they probably will. And that's sort of a signal to the markets that they've given up. They've given up a tight monetary policy to defend the value, the worth, the price of the US dollar. And they're saying we're just going to let it go into the dustbin of history like all fiat currencies have. When, if that takes place, and I'll say more like when, it won't be instantaneous, but within 3 to 6 months, the markets will understand that they've given up. There's no hope alive that this dollar will last in its current form for much longer. And that's when you'll probably see the metals markets really, really move. Yeah, put yourself on the gold standard. I mean, put yourself on the silver standard. That's really the best way. Because if things do not go as the bankers expect them to go, and there is, let's say, a chaotic period where the banks are closed or the financial markets freeze up or there's a electrical problem or who knows, in today's complex society, there are many points of failure, then going to barter wouldn't be something that everyone would want to do, but it's something that if you had the ability to do because you had gold or silver, that'd be one of the primary barter items available. So you'd be in a lot better shape than people that didn't. And again, it may never come to that, but nonetheless, it's chance favors the prepared mind. If you're prepared for the worst case scenario, then you've got it covered.
In conclusion, David Morgan's insights offer valuable perspectives on the future of precious metal markets and the potential impact of the Federal Reserve's policy decisions. His analysis underscores the importance of closely monitoring economic developments and central bank actions in the ever-evolving landscape of financial markets. Thank you so much for watching this insightful video. Leave us a comment and share what you think, and don't forget to like, share, and subscribe. Thank you so much.